In a strengthening bullion bull market, when the short side tries to induce price decline attacks, they increasingly get smoked and smothered under higher prices. During the last 3-month run for gold prices higher, you can see shorts continually buried under higher prices shortly after every red spike sell-off in spot prices occurred. In today's COMEX gold price trading action, for instance, we saw a similar short snake bite, if you will, quickly filled with a decent rally to close the end of the week's gold trading. Now, this recent gold rally has certainly been assisted by a relatively weaker fiat US dollar, as well as by lower yields on US bonds since late last year. But yesterday, I found it interesting that already banks are citing technical gold price support levels at the moment, down to where the 2022 LBMA conference attendees guessed that the gold price would be by October 2023. Of course, no one knows exactly how long this current gold price rally is going to last, and exactly by when the nominal gold price record of $2,075 an ounce will get left as support in an eventual move towards $2,300 and $2,500 an ounce. What I do know is, every single devaluing fiat currency around the world is going to be buried by gold in the coming years, and what gets buried by gold eventually also gets dump trucked upon by silver too.
Pakistan's currency plummeted to a record low. The Pakistani rupee was valued at 255.43 against the US dollar in the interbank market on Thursday. The drop comes a day after foreign exchange companies removed a cap on the exchange rate. According to the data of the State Bank of Pakistan, the Pakistani rupee slid by 9.61% from Wednesday's market closure. This marks the largest single-day decline in both absolute and percentage terms since the introduction of the new exchange rate system in 1999. As the Pakistani rupee plunged to a record low, domestic gold prices hit an all-time high in the country. Gold was trading at 195,000 Pakistani rupees per 10 grams after gaining 4,900 Pakistani rupees on Thursday.
The current gold price runaway in the Pakistani fiat rupee is now being mirrored by a simultaneous, powerful silver price consolidation breakout. And while relative fiat US dollar strength over the last few years might have frustrated silver bulls like myself, a secular bear market for the fiat US dollar is likely here and or not far away from now. So this breakout from the last few years of frustrating price consolidation, it is inevitable. And Pakistan is simply showing us a preview in real time of what that's going to look like. Hello, on behalf of SDBullion.com, this is James Anderson with your weekly bullion market update. Before we go any further, smash the like button so we can share this content with other like-minded sound money stackers. Subscribe to our YouTube channel for more complimentary weekly updates to come, and don't forget to enter our free bullion giveaway.
Raise your hand if you like free stuff. We were going to give away a free tube of the brand new 2023 Silver Eagle coins. Then we said, nah, make it 25 tubes. SD Bullion is at it again with the Silver Eagle Monster Box sweepstakes. How many coins are in a Monster Box? Let's just say one lucky participant is going to be showing off their best celebratory dance moves with 500 shiny new Silver Bird friends. So head over to sdbullion.com/sweepstakes for your chance to win.
The silver and gold markets had a week of tiny ups and downs in trading action. The spot silver price finished the week slightly down below 24 an ounce where it began the week's trading at, while the spot gold price finished flat on the week around $19.30 an ounce bid. The spot gold-silver ratio rose slightly on gold's relative strength to silver, finishing the week's trading up to 81. This past week I spoke with the Silver Seeker channel regarding falling premiums in the physical silver bullion markets. I'll leave a link to that interview in the show notes and comments below. You can go check it out if you're interested. But before we go further, one misconception that someone who has been in the bullion markets long enough to know could point out. During the cyclical bear market for silver post the 2011 run towards 50 an ounce, it was common to see spikes in premiums followed by collapses in the silver spot price. But that was not the case during the first leg of this 21st century secular bullion bull market for silver. I note the green box on the chart below here, which illustrates the last time the silver spot did a fast tripling in nominal price, coincided with a time frame in which relative percentage price premiums over spot simultaneously slimmed down. The rally for silver to follow this massive ongoing price consolidation will likely end up dwarfing the 2011 run in virtually any and all facets. Another major Western government gold-silver bullion mint reports that 2022 was a record year in terms of ongoing demand. The United Kingdom is apparently figuring out the dark irony that the US Mint has already learned. The more they debase their fiat currency units, the more profit their bullion mint can make in seigniorage fees, selling to long-term bullion stackers, preserving their long-term purchasing power. Chinese demand for gold is back and strong again, noted by strong price premiums being paid on gold bullion on that side of the Eastern world. China gold imports in 2022 are back at pre-pandemic levels, importing 1,345 metric tons of gold bullion last year. The gold bullion market worldwide is about 4,000 metric tons, so that's about a third of it going to China. About 30 times the amount of gold that the U.S. Mint sold in all of last year. We can see the west to eastern gold bullion flow from last year by also looking at Swiss gold import to export data. India also imported a fair size of freshly refined Swiss gold bars last year as well. Speaking of India, perhaps you didn't know, but the big gold and respectively largest silver importing nation last year did so in the face of relatively high bullion taxes slapped onto incoming imports. I don't think there's a remaining U.S. state that dares throw an plus 18.45% tax on bullion purchases. And while the nation of India claims that they're considering dropping their bullion import taxes down to below 12% perhaps sometime soon, the fact that they try and tax bullion imports at such a high rate only exacerbates illegal bullion smuggling, estimated at perhaps more than 200 metric tons per year. Staying in the Eastern world, the nation of Japan recorded yet another record gold price high in fiat yen this past week. And once again, I need to harp on the point that where gold goes, eventually silver in a mania phase follows and outperforms. This silver cup formation in Japan will likely be a 45-year building blowout, and you can see how far it has yet to climb from its dwarfing still 1980 nominal price high versus today in 2023. Further into Eastern world news this week, this time from India, we're going to listen to their bullish case for non-precious metals with low inventory levels as China begins to reopen from long-running economic lockdowns.
We're going to shift our focus to commodities. Manisha Gupta is joining in, and today she is focusing on metals. Manisha, good morning.
Thank you for that, Survi. Well, yes, this is one sector that has continued to show very strong gains, even right now, because the dollar index is trading below 100 too, because we have seen very strong US data come in, whether it has been about the fourth quarter GDP numbers at around 2.9%, or it's about US durable goods at 5.6%. And the markets also are reacting to the US home sales, which have seen a second month of a gain. All of those factors really supportive for the metal prices. We anyway have started 2023 with very low inventories. The production curbs have continued in Europe. Even as China is reopening, the production hasn't picked up very strongly yet. So all of these factors have been adding premium to the prices. Most of these metal prices are up anywhere between 10 to 25%, whether it's about copper, aluminum, zinc, tin, lead, etc. Especially for copper, which is seen as the one with most favorable fundamentals. That is a chart that is on your screens, which tells you that major academicians and agencies and the producers believe that going forward in the next 10 to 12 years, there isn't going to be enough copper. So starting with the S&P Global itself, and they think 10 million tons of a deficit is what we will be staring at by 2035. Bloomberg puts that number to 14 million tons. Goldman Sachs says 8 million tons of a deficit is what you could see by 2035 as well. But Codelco, which is a major producer of copper in Chile, says that 8 million tons of a deficit, yes, but much earlier at 2032 itself. Until you spend $150 billion as a spread out capex for the next 10 years, the world is staring at a lot of less copper going forward there, and the demand seems quite strong. So this is one metal which has continued to do quite well, and the markets do believe that an all-time high is not too far away in this year as well.
This busy price chart measures major metals versus silver and gold price performance throughout this 21st century bullion bull market. What you'll likely see moving from left to right is the pre-2008 global financial crisis commodity bull market led by China, followed by the first secular bull leg for silver and gold into their 2011 respective tops. And while I believe we are certainly moving out from an all-time paper asset bubble era back into another commodity bull cycle, What I want to remind you is that this version likely ends in a similar store value crisis again, but likely larger than the early 1980 Western world-driven version. Here's how the two monetary precious metals left all the other non-precious metals in the dust last secular bull top in early 1980. And while of course this time is different, it's also similar. My contention is an upcoming rhyme in store value instability is building worldwide. Yet this upcoming massive call to account by the soundest monies humanity has ever known will be the largest that the world has ever collectively experienced. That is all for this week's SD Bullion Market Update. As always to you out there, take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.